What's behind this inflationary disconnect? Joining me now are Mark Smith. He's Senior Vice President and Portfolio Manager at Wells Fargo Advisors, and John Augustine is Chief Investment Officer at Huntington Private Bank. Welcome to you both. Mark, please explain what the heck is going on, especially in the bond market.
Yeah, well, listen, CPI is kind of the news of the day, hitting 5, and, that hasn't been hit since 2008. The disconnect is in 2008, there wasn't as much liquidity as there is right now. You've had trillions of dollars pumped into the economy by the feds, and then you've got more cash on hand in people's checking accounts than you've seen in 30 years. And so that's the disconnect. Even though CPI is going up,
but why?
Folks are still spending money because they need what they want and they got the cash to do it.
Understood. So here's my question. And, investors look at all this, they go, there's cash sloshing around everywhere. But why would people buy bonds with that money? Why buy bonds? I don't understand.
Listen, people are a little afraid of where we are in the market. When I talk to my clients every day, they're looking at every single stock they own in their portfolio at all-time highs. Mm-hmm. And so when folks think that there's not a lot more to go up, they're going to go into those safety assets like fixed income.
John, what would you add to that? And I would say that the fact that it's happening to me is what's interesting. In other words, we can all sit around here, go, yeah, it doesn't make sense at 1.5, should be up at 2, even if... But it doesn't matter because it continues to persist and it's wreaking havoc at the short end. When the 10 years at 1.5 and T-bills are negative and banks have to park their cash with the Fed instead, there's all sorts of bizarre machinations happening. And I'm just trying to figure out which is the dog and which is the tail, so to speak.
No, Kelly, you're right. The bond market is a conundrum to us. It's confusing to us. It's a mystery. But what we know is there's a lot of foreign buying coming in. We learned that earlier this week with one of the Treasury auctions. Then we also know that the bond market believes the Fed, that this is transitory, that reopening parts of the economy are leading this inflation, which you and Tim were talking about. That's what the bond market sees. And by the way, there could be a more, let's say, spooky component. We're actually seeing small cap stocks down today. Is the bond market thinking that potentially inflation could start to slow the economy?
Exactly.
We haven't thought that one through yet. It's just something on our mind.
And that's exactly what I want to bring to the surface, Mark, because when people look at price hikes, they go, I'm seeing price hikes everywhere. I'm seeing it's got to be inflation. Well, no, price hikes can be a problem if you can't absorb them, right? The thing that's different this time around is that everyone's sitting on these cash balances and sitting on these stimulus checks. And you go, well, maybe the consumer can absorb it, at least for a time. How do you invest in an environment where the prevailing paradigm for the next 6 to 12 months, after that point where things may look completely different?
You've got to look at sectors that haven't performed well in the last, year or so. And there are quite a few of them. You still see that there's quite a bit of upside in the financial sector compared to many other sectors out there. Folks are talking about energy. There's a lot of sectors out there that people can get into and to try to avoid some of these pitfalls of investing at all-time highs. So I'm telling my clients the value over growth right now. You're going to continue to see these consumer discretionary stocks run. Everyone is out. I just went to Miami this weekend, couldn't get a hotel, couldn't get a restaurant reservation. Flights are over $1,000. Wow. This is Coach. So, people are spending money because they have it. Unfortunately, it's the haves and have-nots. So these inflationary numbers are going to really affect the bottom part of the country and the economic stratosphere. And folks at the top just really don't care.